All right, everyone, welcome back. So we'll wait for Asia to finish, then we'll look for anything after that. You guys already know this. All right. So what do we have going on the higher time frame? Let's go into the 1 hour time frame. See what we have going on here. All right, so we see that price already took out liquidity here. Liquidity was taken, came in to fill the imbalance here. So the imbalance filled price action. We have a breakup structure here. So overall, on the higher time frame, in this case, the intraday time frame, because it is the 1 hour, we're bearish, right? So we're bearish overall as we ever took liquidity and we broke structure down here. Then we have the major structure break over here. All right. So that's where we're coming from. We also took out this. Okay, yeah. So remember, right? The market needs a reason. Okay. In other words, the institutions, the big players need a reason to go to this area here. They need a reason. There must be a reason. Equal highs, equal lows, right? They need to take a liquidity. So don't forget that. All right. So you have that marked up. We have a breaker structure. Now for BOS, like I mentioned, I prefer a body, but we're not gonna always get a body. So whatever you prefer. But I prefer a body close. That's just me. So we have breaker structure right here. Okay. They should go with high. Now I need to see if price is going to take out the Asia low, right? Because it created equal lows. So we created equal lows here. So if these lows are going to get taken, where can price potentially come into? Now notice we have a strong low here. We have also equal lows here. Equal lows right there. All right, equal lows right there that were taken by this wick, I believe, by Pip. Then equal lows right there. All right. So if price takes out this liquidity, this low, because there is sell stops here. There's sell stop liquidity here. All right. But we take out equal lows. We mitigate the open of this wick. We have this 50% area that is unmitigated. Now check the 4 hour. That would be a 4 hour block. If I'm not wrong. Let me check. Yeah, that's the 4 hour block the price came into and tapped. And it's currently reacting from. All right. Now this 4 hour block, that's the open, but we still got the 50%. If the open's already tapped in, which lines up with this wick right here, then the only thing that's left is the 50%. So now, if price does break, then we won't be looking for this 50%. But if price fails and it does this, it shows us the opposite QM here, right? And it goes down, then we can anticipate price to react from this 50% area. All right. Just mark up RPR just below. So we have Asia low that has been swept, which is session liquidity. We have also equal lows right there. All right. Now if price does not go below, we have equal highs here. So we have reasons for price to go to the upside and to the downside, right? But now if overall we're bearish, right? Then eventually we should expect a move to the upside and drop down. But because the market moves in buy stop and sell stops, we need to take out the sell stops first before we go for the buy stops. It only makes sense, okay? Because what's going to happen once we take out the sell stops, and then eventually what it's going to do is get more people to buy, all right? And then eventually it'll take them all out. So it's just pure manipulation. All right. So we expect the lows and the highs to get taken. They're equal highs, quite obvious. This is too far away. We need a reason for price to even come to this area here. All right. We need a reason for price to come here. So something like this would be what we would look for. Because this right here is just enough. It's enough liquidity just to make a move to potentially this area here. And then continue. But then again, money was transferred from this area to this area here. So the money is stuck here. So eventually you have to come back, all right, collect that, then we continue going. So let's play this out and see what we get. So Frankfurt opens. All right, so you cannot ignore what's going on here. We can get some potential trades. Now this is a strong high. In the smaller scale, that's a strong high. So that should hold. Then a broke structure right here. Broke structure, retracement. Took out this liquidity. This just got taken. So it gave price a reason to go higher. I need to get it wick. So we'll probably drop from here to the downside. So we're going to short position from here. Stop loss can be just above this high here. There's the 5-minute wick. There's a order block lined up with that. Yeah. So this would be a nice short to the downside to target these equal lows down here, exit here, then look for longs here. As it is a strong high. And we're currently overall bearish. Currently right now, I'm bearish. So these equal lows give priors a reason to go down lower, then go higher. I mean, we could expect that. All right. That's what's currently going on right now. So we'll take the risk, go short, because it makes sense. It makes logical sense for price to first take out these lows, then go up higher. For now. We're currently bearish for an order flow on this time frame. Meets all the rules, the patterns there. So let's take it. All right. Okay. So we took out the Asia high. So that'll be a stop loss for us. We took out the Asia high. Stop loss. So that hit is L. We took out the high. So now we took out liquidity from here. So now this is done for. So now because we took out this Asia high liquidity, the next thing is going to be this low, and for sure you see lows here. So I'll wait for confirmation here because now this is feeding liquidity into this. Now that gave price a reason. We're gonna take it out. Because if this was a valid strong high, then it should have never got taken out. Right. Now of course we had the bigger structure here, but in the bigger picture, this is a failure swing. Yes, I do see that. I am aware of that. But created what I was looking for. And this was a untested area. So that would have been my first short. His stop loss is fine. Now we took it out. Now we're on a untested high here, giving price now a reason to take this out. Okay, so right, retracement. So the short would have been up above this high here, so we could take the short from here. It hasn't gone yet, so and now it should go. There it is. Okay, so we took a loss here. That's fine. Now, as we're talking about this, maybe I would have seen this, or maybe you would have seen this in a different day. And what I mean by that is, depending on how you feel that day, right? You as a trader, depending on how you feel that day, maybe you would have not seen this. Maybe you would have said, yeah, that is going to be the inducement to this, right? Or maybe you would have taken this like I did today. And what I mean by that is, as a trader, right? When we wake up every morning to trade, right? Sometimes we feel sick, we have a headache, we're in a bad mood, we're in a rush. That will affect your performance on the chart, right? If you're very tired, that will affect your performance on the chart. So it's not that the strategy is wrong, it's that you yourself is the issue. Okay. Like we can't blame the market, we can't blame nothing, the news. We can only blame ourselves. So maybe on a better day or on a good day, as it is late here where I'm currently at, maybe on a better day I would have been, oh yeah, that's an inducement, right? But I traded what I saw, which was this. I was so aware of this could have been a potential failure swing. And in the back of my head, well, if it fails, now it gave price a reason to go into here. So because it took out the SL, I mean, because it took out the high, it hit stop loss, that just let me know, okay, this was not a strong high then. It's not gonna hold no more. So I had two options in the back of my head, which was if this holds, then we go. If it doesn't, then the other potential scenario can be react from here. All right, react from here. And now, because we took out this high here, the Asia high, the only thing left will be the Asia low. Now, of course, that is combine everything together. Now, let's say I took the loss here too, then I wouldn't be surprised if it took these highs out and it came into here up here, right? But we got to choose to close pair to liquidity. So again, following my rules, that's the inducement because it got taken. So if that's the inducement and that's my break of structure, retracement, failure swing, then that would be my T2, T2 formation, right? Sometimes we don't see them instantly. Maybe we have to see a little bit more data. Maybe we have to, step back a bit or take that loss before we realize that, oh, that's, T1 or that's T2, right? It's small little things that as a trader you go through and you realize, right? I'm not perfect, at all. I have the strategy packed down completely. I completely understand it. I'm aware of every scenario that the market can throw at me with the way I trade. But most importantly, I'm able to manage my emotions manage my capital properly and whatnot, right? Smaller things that you as the trader have to practice, right? It's a skill set of itself to switch time frames. It's a skill set of itself to even think or to even have the patience to wait. Everything is a skill. It's not just the technical analysis. The technical analysis is not the hardest thing. The hardest thing is going to be you as a trader understanding yourself within the markets. And that pretty much means, whatever you go through in life or however your life is, it will affect your performance on the charts. But yeah, so anyways, that took me out. That was a loss. Nice. But here's a short, nice 1 to 5, 1 to 4, 1 to 5, right there. So now that we took out the low and we took out the equal lows, now not only that, we also created again the equal highs are still there. It's giving it a reason to go there. All right, it's giving it a reason to go there. If we already took out the low and we took out the equal lows, we're coming to this POI here, which would pretty much give us a reaction. We're currently in this range, smaller range. That's a breaking structure, strong low, taking out liquidity. It will be an obstacle that we're coming from, not coming from, but the obstacle that we're reacting from. This will be the reason why this pullback occurs to take the short to the downside. All right. So I'm already up 5%, let's say. Took a loss, and now we had a winner. So now let's look for confirmation in here. Because the POI is very small, the most logical time frame will use the 5 and 1 minute. Right. So we have a breaker structure already. So now we got to monitor price closely. All right, we broke structure here, which is also a breaker. It's a breaker. And a BOS. So that means if I get something like this, my T1 or T2, I'm going to take that trade because it formed here. We choose a closed POI to liquidity. Price does not need to fill this imbalance. It doesn't have to, it doesn't need to. Because if the money was here, price already tapped, collected it, then it's left here. Right, on the higher time frame. So with the higher time frame, should be able to see what I mean. I don't want to go to the 1 because it might show the move. But what I mean is on the maybe the 15-minute, you might be able to see it, or the 1 hour, but let's see if you can see it here. Yeah, you can. Okay. This. All right, look. So we have this candle. I take a liquidity. I tapped in. So the money's here in this candle. So price, all it needs to do is just tap and go. Okay. And it'll collect the money. All right. So it's money being transferred. So that lines up with the breaker. You see that? And right there. So that's the breaker. So we can just draw a zone here. I'm interested in this area because it lines up with the higher time frame block. So let's see. Three confirmation forming. Let's see. So price went to the upside, made a retracement, we broke. So we pretty much can say we have a Q information here. This lines up with this unmitigated wick. See that? So the higher time frame lines up with the breaker lines up with the unmitigated wick. We have a low right there. Now I will go to the second time frame, but it probably won't go that far, so I don't want to go there, but just know this is T1 right there. T1. Remember the market is fractal, so we treat them the same way. So I'm gonna take the risk here. I'll do a 2 pip stop loss in case it slips below a bit. So my target, let's see. We're gonna target those equal highs that I had marked up. That's a 8. No, I'm gonna target here because that's all I literally see right now. That's liquidity. So we target the liquidity, right? But liquidity, there is retail stops just above. So I'm gonna target that high, which is extra inverse liquidity. I can't say I'm gonna target all the way this up here. All the way up here, target all this. At least not yet. I mean, that's an AR. I'm more than happy with that, so I'm gonna target that. And then once we take out this, then we'll see what happens. But right now, trade what you see. All right, let's break that high, go break even. Okay, so we'll go break even now. Okay. I would have taken this if it took out this low. If it took out this would have been nice to come in here. Very entry, but that didn't happen. That's okay. It didn't really get this higher time frame block anyways, so but again, it's what you see at the current moment. In hindsight, we can say that it came here, but that's in hindsight. All right, so target hit. That's 8. Took a loss. Winner, winner. So we had 2 winners. And yeah, this is the London. This was London Open from 2 and 3 a.m. And then we'll be approaching pretty much the middle of nowhere. We should anticipate price to reach this area by New York. So yeah. But yeah, this seems to be everything we'll get for London. Let's see what happens. Yeah, so it just impulsively kept going. So we're for sure done for London. This session is done. New York will get something here. All right. So what's happened here? Let's see. Now, I would like to see price to pause for a bit, build up the liquidity, and then go into that POI. All right, so it went straight to the POI. Okay. So now, now that we're in this huge POI, we have the monitor price. So let's check the 1 hour. All right. And remember, we are in the open, but there's always the 50%. So what does that mean? Okay. So like I mentioned before, you have to see how price is being delivered. So if price does this, then that can happen, right? On New York Open or the New York Kill Zone. All right. So we already fulfilled more than 50%. And I didn't get that build up before price hit the area. That's fine. But that's what I would have preferred price to do. It would have just gave me the confidence to actually take a trade here. But again, because the big PY, we have the open, but of course there's literally equal highs right here. There's liquidity right here. So this could have been the reason the institutions pushed up higher to the 50% area of the POI, area, which is in this case, imbalance field price action with liquidity just below it. All right, that's why we have to see how price being delivered, then dissect and see what's going on here. But regardless, that's my PY. It's a strong high. As long as this holds, it doesn't break. All right, we're looking for shorts, following order flow. So now all we need is just a Q information here, and then we take the trade. So it looks like we missed an opportunity here. This is 5 a.m. You can see we came down. I believe we broke structure. Let me see. Yeah. So we broke structure here. Create the QM right there. QM here too. That's the range. Came back up. Took out this 3 candle formation, which is a high point. Then dropped, created equal lows, which gave price a reason to go down here. Even a better reason. These are equal highs right there. So we took out sell stops, sell side liquidity, sell stops that we're taking. All right. So now we could potentially come up for buy stops. So if I took a short here, then my target would be this low right here. Remember, depending on what range you're in, you're gonna always target the external point or structure point of that range. Okay, so just keep that in the back of your head. You're gonna always target. So if I short here, I know my TP is right here because we target liquidity. So after price takes out liquidity, what does it do? It most of the time it reverses. So that's why we target the external point of the current range, right? So if you're short here, you just took out this low and you know that price can come into a POI, you goes a reaction, then pay yourself at least 50% because it could come back and take you out. Because now this entry becomes liquidity. This is the 5-minute time frame, right? You have to look at the higher time frame, the 15-minute, right? The 1 hour. Are you in the major range or are you just in the internal range? Because is this high here just the inducement for the bigger picture? Okay. So now let's see what happens. We missed a short there. Now, unless there's news, I wouldn't say that this short would just drop directly. It's not gonna just tank unless there's news or some type of event, right? So we need price to obviously react from somewhere. We have imbalance here. SOB, price came in, took it out. Right now, we're currently bearish, so price eventually will make a stop. The only higher time frame POI besides this imbalance that we had that got completely violated is this one over here, but we're in the middle of pretty much nothing being clear. 3 candle formation. There's liquidity. Price going up higher. We create sell stops, which would not make this POI valid. So if you took a long here directly, I'd say, and you took a loss, okay, that's fine. All right, that'll be an obstacle because you are pretty much counter trading. You're going against the higher time frame order flow. This is I think it was a 15-minute or 1 hour. If I look at the higher time frame, it will show the movement. I don't want to do that. But it is a 15-minute imbalance. And I wouldn't choose that one yet until it gives me a reason. So right now we're bearish till then. All right. So yeah, so see it took this OB out. So most likely that's going to be the SMC trap. That's what they call it, right? SMC trap. Took out the SMC traders. But for us, it's an obstacle because we know the higher time frame. We're not expecting to go long here all the way to the top. No. So it's an obstacle. Of course, we wait for confirmation on obstacles. We rather wait for one. This low was formed just above this, which gave price a reason to go down. All right, so let's see if we can get something from here. It's pretty big POI, to be honest. So we could get something. Let's see. Created equal highs. Looking nice. Gotta check the candle closures. Okay. All right, took it the low. So we left equal highs. Give it a reason. We're taking out sell stops. I have buy stops left. So the high chance, this is gonna go high chance. It only makes sense, like if the institutions want to go long from here, they first need to clear out the liquidity, right? Take out the liquidity. They have to make a manipulation to get people to think, all right, block structure, and then the smart money traders go short here. And then they get swept. When there's literally equal highs just above, probably not what you want to do. All right. So I know in a second's time frame we got something here, but can't go there. Yeah, that was perfect entry to be honest. We probably can get something. We just broke the three candle formation, broke a high. All right. Now remember this, it's not only a BOS, but also a reason for price to go into this. So now the question is this swing point going to take out that low, or is it going to fail and go up higher? So we will take the risk. Got this low. So let's see how much. Mitigate this. So we left unmitigated. 3.8. The two over there. I'll take the risk from here. See what happens. All right. So I took a loss here. Now I was taking it here in this area because that was the liquidity to go along here. Because that came to mitigate this block and then go long. Right. So most likely this creating more equal lows, so we could get it pushed down to the downside. I was really not anticipating price to come all the way down here. All right. So there. So I took the risk here. All right, even though the current order flow at this time frame is bearish. So like I mentioned, either this is going to go great for a swing or continue its overall order flow because this is not only a BOS, it's also a run of liquidity, like I mentioned beforehand, to take out this. This created equal lows, so I kind of knew what I'm taking out. So take a loss here. That's fine. All right, coming in deeper. So this is what I mean by monitoring price, right? You gotta monitor price because we are in an obstacle. We got a break of structure. We're coming in deeper. We're definitely not at the 50% level. All right, we got break of structure. You got your confirmation. We take that low out. I will go for long if retracement came into here. It's a bearish order flow. We're already in too deep in this POI. Higher time in POI, so anticipating the long to make that pullback for a short, right? Now this is the counter trend. And London, not London, but New York's about to open 7 o'clock. Right below this. Yep, right there. Perfect. Okay. Like I mentioned, I wanted these to get taken. They were equal lows. Pre-confirmation, you see that? Got taken, and now we should go. So there's a valid trade, as I did mention it before it happened. 22 pip stop loss, so right there. Took a loss here, but I understood why I took the loss. It was just quite obvious. So now, that's the break. We have a retracement, the equal highs too. Then we have the untested. Yeah, it's literally untested. Untested empty get wick. All right, so remember to switch time frames because if you stay only one time frame, just one time frame, you'll get so lost and confused. That's the high, that's the low. It's a failure swing, so it had no purpose, right? It didn't do anything on the higher time frame. So your current structure at the moment, time being, is that's the high right there. Price push down, and this will be the low. So the way that we're going to see this will be like this. That's the high. This didn't do anything. This is the one that made a push up, took out its high structure, broke, from the QM. This becomes internal liquidity that most likely going to get taken out. So that's internal liquidity. Take it. Then continue going down lower. All right. This is your current range, your current dealing range. These all become weak. Now, it doesn't always get to this point. So let's check the higher time from POIs now. Where's the money being transferred from? Again, we did come into the open here, but we're still at the 50% area. We have an unmitigated POI, so I'm going to exit here and let's see what happens. All right, so now we could expect a reaction here for sure, some type of reaction, some type of pullback maybe. Okay. So now the question comes, if we already took out supposedly the internal liquidity, then shouldn't this leg right here continue? All right. So if we already took it out, if we already took out liquidity, we already took out buy stops, then price should just drop. It should just continue going. All right. So if it doesn't, then we already know what's going to happen, right? Liquidity built just below, I mean, just above this block here. It's also a higher time frame block that lines up with. So we'll get a reaction from here to the upside. Something like that. We could. All right, so that's what we could expect if this price point fails. I mean, this didn't even tap into my order block, nor this imbalance. It just swooped in and dropped. So I mean, that can happen. It'll just take it and drop, but see what happens. Um, so no short here, to be honest. It's not even near a higher time frame POI at all. Yeah, so we'll get a push down to see what happens around this area here. There's a higher time frame POI. Let's monitor price. Okay. All right. Take those lows out. Of course. Now you notice why. Gave it a reason to go lower. Order flow mitigated this. Mitigated this. All right, so now we're in the obstacle. So now we're in the obstacle. So now price should not break a high. All right. Shouldn't. There's a strong high. Take a liquidity and brush structure. So it shouldn't break a high. And if it does, there's a failure swing. Broke it by pip. This is the 1 minute, so the wicks count for me. Yeah. It shouldn't even have broken it though. So following my rules, I'm gonna take the trade. So 5% stop loss down. That's a 2. That's not even a good risk reward. But I'll go break even. Vehicle highs up here. Price brush structure. Retrace, brush structure once again. If this is all liquidity, then you can imagine how many people are going short here. I mean, this is not even worth the trade. It's a 1 to 2, but we could anticipate price to go from here. There's a failure swing, so high chance it'll go from here. All right, see what happens. Yeah, it should fly to the upside now. It broke already structured multiple times. It's just consolidating. Still New York. Strong low still intact. Yeah, we had potential entries here, but it's not even worth the trade. For me personally, it's not even worth it. Oh, this is some ugly price action. Let's put this up. Okay. So yeah, so okay, so that was fast. So we did take out this high, which it confirmed after we saw that structure break up high. Build up liquidity, notice that, before it went higher. Did we take out this high? Oh, we did take it out. We did take it out. Yeah, we did. Yeah, so that's what I anticipated in the beginning, that could have been taken. All right. But regardless, I exit out here. That's the safest target because price could have easily reacted from here. And this is around almost late New York, yeah, around 9:44. So exit out here and take out these equal highs to anticipate. Now for me to have POI on equal highs, I mean by now we should know that that's still probable because they get taken out. Unless it's a strong high, but it's not a strong high, it's the equal highs literally. That's a strong high. See that? That's equal highs. So you give price a reason to take this out and go here. And now we build up liquidity here. I mean, notice the build up. So that was the current dealing range. And now my overall target, because we're overall pro trend now, is that low. There we go. Nice. So we had a few wins, a few losses on this session. That's okay. At the end of the day, we came in profit 5, 8, 9. So a nice over 10% day, like 2 losses. So you risk 1%, let's say that's 2% loss, and around over 10% win. So not a bad day. But I go for 1 to 5. I mean, if you can do 1 to 5 per day, that's 5, 10, 15, 20. That's 25% a week. That's over 2 for 6. That's over like 80% a month. So at 5% a day doesn't sound like a lot, but if you catch one, let's say every day, for example, which you can put every day, that's 25% a week. That's around $25,000 USD on a $100,000 prop firm account. So it's a lot of money, and then if you're doing 80% on month, right? On like average, that's $80,000. But if you do 5%, if you go for 5% per trade and you even hit, let's say 10 to 15% per week, that's still well over 25% a month, which is over 25,000 USD dollars. So you have to put everything in perspective, right? Like, logically, you know, what type of lifestyle do you want to live as a trader? Do you want to stay on the charts all day and catch up and down moves? Like what's the whole point for that? Everyone's different. Swing trading, or do you want to hold a position? Do you want to just get in and out? Are you going for a 1 to 5? Are you going for a 1 to 10? I personally recommend a 1 to 5 because it's very, very, very doable and realistic to catch 1 to 5s every day. And that's already insane of percentage at the end of the month. So, but yeah, guys, anyways, enough of my rants. That's it for now. All right. We fulfilled target and everything. So that's it for now. On to the next one.